Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hello, checking in on SPY IWM and QQQ, and to start the month, to start Q3, we're pretty much seeing how we ended Q2 with further weakness in the tech sector, further strength in the financial sector, and watching some funds roll over into different places. So while we are seeing a bit of weakness, we are not seeing the magnified weakness we would expect with the tech sector down so significantly in the last 5 days, but holding up just fine in all reality. We are rejecting from the middle Bollinger Band resistance, so that is a level to be watching. Past 2 days have rejected from that point, and we did close weak here down at the low of the day into the close. So we have continued lower highs is what stands out the most to me on this chart. And we have the all-time high, then a lower high at 244.38, 243.72, and now 243.38, and we're just watching these Bollinger Bands, which tightened up. They're now beginning to slowly expand to create some room, and that could mean some room to the downside with where the momentum is currently favored. We are just seeing lower highs, and if you look at the past 5 days on the hourly time frame, you will see that every bounce is leading to a lower high, which is still favoring the bears in the short term. But if you look at the weekly time frame, we're still fine here for the bulls. We're holding exponential moving averages. And really, again, as I keep saying, as long as this middle Bollinger Band holds on the weekly time frame, which has not even been tested in 7 months, 8 months at this point, as long as it holds, the bulls are in control, as that is the upper Bollinger Band bullish channel to be trading in. And we are very easily in this level currently. We'll just start to pay attention if we do break the low of that dump, the low of Thursday, 239.96. That's an important support for me. And if that breaks, we know the bears have continued momentum. IWM, right on the verge of new all-time highs. Didn't quite get there, but that is the level to be watching. That's 142.90. We got to 142.50. So IWM is holding up so well due to its lack of exposure to the tech sector. SPY and QQQ are both exposed to the tech sector. So IWM here is looking just fine. We had a bull break of the inside bar today at 141.67. That was a bull signal, and it led to 80 cents to the upside. So bulls in control, on the verge of a bullish MACD cross, and the upper Bollinger Band is now ascending to the upside to create some room to approach that all-time high. Weekly time frame is grinding against the upper Bollinger Band resistance, holding the exponential supports, and certainly trading in a very healthy spot here on the weekly time frame as well, on the verge of a bullish MACD cross here, just like we're seeing on the daily. So IWM right now is in the best positioning compared to the recent all-time highs, and the other two are behind in terms of strength. QQQ, because of the exposure to the tech sector, it is the weakest, and we are seeing lower highs and lower lows continue. So the next support that we were looking at was down here at 135.50. We dropped down to 135.80 today, so that support is still holding. But if we break 135.50, my focus automatically shifts to 133.92 and 132.40, and these are two gaps on the daily time frame from back at the end of April that have yet to fill, and those will be our gap fill targets. Now that the bearish reversal head and shoulders pattern is confirmed, we're rejecting from exponential daily resistances, and we're seeing continued downside action over the past week on some pretty solid bear volume. Obviously, the half day of trading today, not a lot of volume to be going off of, but it was a big bearish candlestick, and we ended with weakness and momentum to the downside. So the weekly time frame, the bearish MACD cross has already followed through. We're testing the middle Bollinger Band support on the weekly this week, I should say, 135.17. We haven't touched it just yet, but we haven't touched it in 7 months as well here. Same as for SPY. So this is significant. Look at the volume. Again, I cannot specify how significantly this volume stands out for me in terms of signaling the temporary top. So we're going to test this middle Bollinger Band. Bearish MACD has already followed through. Bearish TCG cross is about to follow through. And I keep looking at the monthly chart, looking longer term. And looking out the last 5-6 years on the monthly chart, this is just the start of consolidation. It's following 7 green months in a row. We had our bearish reversal candlestick with volume climax, and we're now consolidating. Could this be a bull flag? Absolutely. But that could mean another 2 months of consolidation before the bull flag even begins to develop. So I am watching this longer term pattern and noting obviously that we have been in a very strong uptrend since 2008 here at this point, about 9-10 years. So that certainly is favoring the bulls for continuation, just because the pattern has been in their favor for so long. But watching to see how this bull flag develops and watching to see how much consolidation does occur. So I appreciate you watching. We'll continue to check back in. Have a good 4th of July, and we'll see you on Wednesday.